to turn to inflation. The CPI inflation trajectory has moved in close alignment with our projections. In particular, the softening of food prices is providing welcome relief. The improving prospects for food grains production and the expected easing of vegetable prices on fresh winter crop arrivals are adding further optimism. Moreover, the softening of pulses and edible oil prices is likely to continue in response to strong supply-side interventions by the government and increase in domestic production. The hardening of crude oil prices, however, presents a major upside risk to the inflation outlook. Core inflation remains elevated at tolerance testing levels, although the continuing pass-through of tax cuts relating to petrol and diesel last November would help to moderate input cost pressures to some extent. The transmission of input cost pressures to selling prices remains muted in view of the continuing slack in demand. Further, as risks from Omicron wane and supply chain pressures moderate, there could be some softening of core inflation. On balance, the inflation projection for 2021-22 is retained at 5.3%, with Q4, that is the current quarter, at 5.7% on account of unfavorable base effects that ease subsequently. In particular, CPI reading for January 22 is expected to move closer to the upper tolerance band, largely due to adverse base effects. Taking all these factors into consideration and on the assumption of a normal monsoon, CPI inflation for 2022-23 is projected at 4.5%. I repeat, CPI inflation for 2022-23 is projected at 4.5%, with Q1 22-23 at 4.9%, Q2 at 5%, Q3 at 4%, and Q4 at 4.22%, with risks broadly balanced.